My name is William Crossland, and I'm President and CEO of Thermal Energy International, Inc. I'd like to take a few minutes of your time today to tell you a bit more about the Thermal Energy International story. Thermal Energy International is a proven, profitable provider of carbon emission reduction solutions to some of the world's largest companies. And we believe Thermal Energy International currently represents a very compelling investment opportunity. We trade on the TSXV under the symbol TMG and on the OTCQB market in the US under the symbol TMGEF. I have to provide you a forward-looking statement caution. Compelling investment opportunity. Why do we think it's a compelling investment opportunity? Well, first of all, we operate in a very large and very fast-growing global market with very strong fundamentals. The business case for energy and carbon emission reduction solutions has never been better. Virtually every major country and every major company around the world has new aggressive carbon emission reduction targets, and they are more serious than ever about achieving those targets. In addition to that, over the last 12 to 24 months, we've seen a dramatic increase in the cost of both energy and carbon. In addition to the very strong market, we're also an established company with a proven track record of growth and profitability. Pre-COVID, we had more than a 30% compound annual growth rate over 5 years, and we were profitable. And despite the challenges of the pandemic, which I will talk a little bit more about in a few minutes, we have continued to invest in the growth and capabilities of the company. So we are poised to continue our strong track record of growth and profitability now that the haze of the pandemic is finally lifting. Despite the strong market, despite the proven track record, we currently have a very compelling valuation of only 0.7 times pre-COVID revenues and only 1.1 times LTM revenues. So we think this represents not only a compelling valuation, but a compelling investment opportunity for investors. So what do? We design, engineer, and implement innovative industrial carbon and thermal energy reduction solutions for major multinational companies around the world. And we do this using our own suite of unique proprietary technologies, which you can see down the right-hand side of the slide. The company started years ago with the Flu-Ace direct contact heat recovery technology. Then we added the GEM steam traps and the Dryrex biomass drying about a little over 10 years ago now. Then a little less than 4 years ago, we added Heat Sponge and Sidekick when we acquired boiler room equipment. And then just last year, we added the SOFEM technologies, which you can see in the bottom in blue. So we now have over 10 very complementary thermal energy and carbon emission reduction solutions that we can use to develop projects for our customers that pay for themselves. Our projects pay for themselves from energy savings alone. The project paybacks, again, from energy savings alone and before the recent increase in energy prices is about 2 to 5 years. But these are projects that have about a 30+ year useful life. So these projects will continue saving carbon and energy and money for our customers as long as that site is in operation. So anytime that you have a 30-year useful life and a 2 to 5 year payback, you know you have a very compelling return on investment. How do we do it? Well, we develop our projects in partnership with our customers. So we work collaboratively with the customer to achieve their carbon and energy saving goals. We have strong direct relationships with our client base of leading multinational customers. So because we're working collaboratively, it's a sole source delivery model. We are rarely involved in competitive pitches. And if it is, it's just usually at the very start of the process. And we deliver our solutions with a flexible approach, usually either as a turnkey project or a customized piece of equipment. Turnkey projects are exactly as the name sounds. That's where we design, engineer, install, commission, train the customer to use the project. And all these projects, again, are based on our proprietary technologies. Turnkey projects, historically, pre-pandemic, represented about 65% of our business. So about 2/3 of our revenue was turnkey projects. This is the part of the business that has been impacted by the pandemic. And so this revenue is about 30%. Turnkey projects are about 35% of revenue now. The other way we deliver our solutions to customers is with customized equipment. That's where our unique technologies are customized for the customer and for the customer site and the application at that site. Every piece of equipment we sell is customized to the customer's needs and then shipped. So we book the revenue once the equipment is shipped and the customer installs the equipment himself. That pre-pandemic represented about 35% of our revenue, but this part of the business has continued to grow throughout the pandemic and currently represents on an LTM basis about 65% of revenue. To talk a little bit more about the fast-growing global market, I mentioned the business case for industrial thermal energy and carbon emission reduction solutions has never been better, and there's a bunch of reasons for that. First of all, about 90% of industrial energy use is thermal energy, not electricity, but thermal energy, where the customer is burning something, usually natural gas, to create heat. And the overall average efficiency of that thermal energy is about 50%. So there's lots of savings and lots of potential energy savings, that efficiency gains that we can deliver to our customers. So improving thermal energy efficiency is by far the fastest, cheapest, and easiest way for our customers to reduce industrial carbon and energy use. Second reason, significantly increased carbon emission reduction targets. As I mentioned, virtually every major company in every major country in the world has new aggressive targets that they're very serious about achieving. Most of the targets are sort of for a 40 to 75% reduction in carbon by 2030, driving towards net zero by 2050. So there's huge opportunity and a long runway for us to help our customers drive towards net zero by 2050. In addition, as I mentioned, dramatically increasing energy costs. So natural gas prices are up significantly, not just in the last 12 months, but really over the last 24 months. So, but in Europe, they're up about 400%, North America up about 150%, and they're forecast to continue this trend into the future. So energy prices are not coming down anytime soon. And obviously, 100% increase in energy cost is 100% improvement in the project ROI for our customers. So if it was a 3-year payback, now it's going to be a 1.5-year payback. And then finally, increasing cost of carbon. In the EU, carbon credit market is up almost 75%, already over $100 Canadian a ton. Canadian carbon taxes are currently $50 a ton and are expected to increase to about $170 a ton by 2030. So again, by way of example, $100 a ton in carbon cost increases the average return on investment of our projects by about 50%. So you've got both energy costs and carbon costs, driving up the return on investment, driving down the cost to the customer. So that's very good for us. It's very good for our customers. Where do we do it? Well, we have corporate offices in Canada, the United States, and the United Kingdom. We have direct sales offices in 7 countries, but our strategic focus is North America and Europe. We've completed hundreds of projects in 30 different countries across 6 continents. But again, our strategic focus is North America. Having said that, we will do projects wherever our customer wants us. So we really are customer focused. And despite the challenges in the pandemic, we have continued to grow our team and our global presence. So, added a bunch of sites in 2019, then in 2021, a second German office, in 2022, a French office. So we are continuing to invest in the growth and capabilities of the company. I've mentioned our extensive multinational client base a couple of times. We focus on very large energy intensive multinational companies for 2 reasons. Number one, it's the very large multinational companies that tend to have the very large energy intensive sites. So if you've got a site that's using a lot of energy, we can save a lot of energy and do a nice big project. So great economies of scale at these large energy intensive sites. The second reason is these are the companies that tend to have hundreds of sites around the world. So after we've sold one project or one solution to one site, we want to sell multiple projects to multiple sites. And just so by way of example, over the last 4 years, 60% of our orders have come from our top 10 key corporate accounts. So far, we've partially penetrated about 100 of these customer sites. And I say partially because in many cases, we've just had some small orders for steam traps and things like that. We're just establishing the relationship at the site. So partially penetrated 100 sites in 15 different countries. That sounds like a pretty good penetration, except you have to keep in mind that these 10 key corporate accounts have about 1,000 manufacturing sites worldwide. And so our penetration is less than 5%. So still lots of opportunity with these 10 key corporate accounts alone, let alone new ones that we're developing every day. Across the bottom is just an example of some projects that we've done for customers over the last few years. The icons show the variety, the diversification by sector, so dairy, brewing, hospitals, dairy, snack food, pet food, and beverages. You can see the projects tend to be about $500,000 to $2.5 million. Payback sort of 1.5 years to 4 years, and location diversified between Europe and North America. To drill down a little bit further, here's a case study of a repeat customer. So this past fall, we announced a global nutrition company had once again turned to thermal energy for carbon emission reduction. This was a $900,000 order for a turnkey project. So again, design, engineering, manufacturing, installation, commissioning, training, one-stop shop. This was the third turnkey project installed for this company in the last 2 to 3 years. So far, thermal energy has received $5 million in orders from this company from 10 different sites. But again, it's only a partial penetration because we've only done 3 big projects. The rest have been much smaller, so we're just starting to penetrate some of these sites. But that's 10 sites, but this company has 150 manufacturing sites worldwide. And then again, by way of example, the energy savings from this project were about $300,000. So about a 3-year savings from energy savings, a 3-year payback from energy savings alone. But the carbon reduction of about 1,400 tons per annum was worth about $400,000 to this company up front. And so that reduces the 3-year payback from energy savings alone to about a 1.7-year payback from energy and carbon savings. So at the end of the day, what makes us unique? It's the combination of a unique suite of complementary and proprietary products. No other company that we're aware of has such a broad suite of solutions for the customers. So regardless of the need, regardless of the specific application and situation, we have a technology that will get the job done. On top of that, the only company that we're aware of that has both the proprietary technology as well as the ability to design, engineer, deliver, install, and train on a turnkey, one-stop shop basis. And these projects are delivered with a compelling return on investment. And as a result, we have established strong relationships with our major multinational customers, and about 80% of our business is repeat orders. So bottom line, why do customers keep coming back? Quite simply, because we get projects done on time, on budget, and with guaranteed performance. It's the quickest, easiest, and lowest risk way our customers have to meet their carbon and energy reduction goals. I talked about a proven growth strategy that drove us to more than 30% compound annual growth rate. And there was really 3 pillars to that. It was leveraging our existing high quality customer base. So I mentioned that before. That's, selling one product to one site, then selling multiple products to multiple sites, working with the customer to find the opportunities and sell to multiple sites around the world. And we also want to increase our portfolio of complementary products again. So we have, regardless of the needs of the customer, we have the solution to fit that need. And finally, grow our team and global presence. And we want to do this, and we have been doing this both organically and through accretive acquisition. And we want to continue doing it organically and through accretive acquisition. You can see that of the 31% compound annual growth rate, about 28% of it was organic. So very strong organic growth rate historically. And we want to continue doing that, both, as I mentioned, growing organically and through acquisition. And we have a solid acquisition platform. We have established sales, administrative, and engineering platforms in North America and Europe. We have direct relationships with a growing list of large multinational customers, and we have a strong balance sheet and proven profitability and cash flow. To talk a little bit more about our historical performance, you can see, the 31% compound annual growth rate for the 5 years right up to before the pandemic drove us to about $25 million in revenue just before the pandemic hit, about $3 million in EBITDA, and $1.7 million in net income. But then, the travel restrictions, site lockdowns of the pandemic temporarily have impacted our turnkey project revenue. Custom equipment revenue, on the other hand, has continued to grow. But obviously, as I mentioned, turnkey revenue is 2/3 of our business. So that revenue was down significantly. That has affected our revenue over the last 2 years, and has, the lower revenue has obviously affected our profitability, because we have been keen, strategically, we have been focused on continuing to grow our capabilities so that we were ready to emerge once the pandemic cloud lifted. So while turnkey project revenue is down, custom equipment revenue and turnkey project development which I'll talk a little bit more about in a minute, has continued to grow despite COVID. So that paints a positive picture for sure for the future. And we've continued to invest in growth and capabilities. So for the last 12 months, our most recent 12 months, turnkey solution revenue was still down about 61%. That's pretty significant, obviously, but turnkey project development, that is developing projects that will turn into revenue at some point in the future, it was up 100%. Custom equipment orders are up 44%. Custom equipment revenue is now well above pre-COVID highs already. And cash and working capital, despite the challenges of the pandemic, remain strong at $2.3 million and $1.5 million respectively. So we are poised and ready to continue our strong track record of growth. Okay, so to show you a little bit more about the impact on turnkey solutions. So turnkey solutions obviously require a significant amount of travel, significant amount of on-site visits and presence at the site to sell, to develop, to engineer, install, and commission these projects. Usually these large turnkey projects orders are preceded by a paid project development agreement. So that's where the customer is actually paying us to develop, to do the final development and engineering for the project, to deliver a fixed price and guaranteed price and savings to the customer. So that usually precedes the order. So as a result, you know, given the complexity of these projects and the necessity of project development agreements, the sales and revenue cycle for turnkey projects tends to be about 2 to 3 years. So it takes 6 months to a year to obtain a PDA order for the project development, then about 1 year to do the PDA and obtain the final project order from the customer, and then another year to actually complete the project, fully complete it, and fully revenue. But the good news is, the most recent LTM, we've had 10 new turnkey project developments received from customers, paid project development from customers. We currently have 17 paid turnkey projects under development with customers, the highest it's ever been, double the 2019 pre-pandemic levels, and you know, as I said, the highest level of project development in the company's history. So that, you know, certainly bodes well for the future. On the custom equipment side, you know, obviously custom equipment requires much less travel to site. And so it has not been impacted by the pandemic. Orders and revenue are well ahead of pre-pandemic levels. The custom equipment sales and revenue cycle is about a year. It's sort of 6 months to obtain the order, plus about 6 months to produce and ship the order. We book the revenue as soon as the equipment is shipped out the door. So on an LTM basis, order intake is 44% of the pre-pandemic high. Revenue is 20% ahead of the pre-pandemic high, and order backlog is almost 120% higher. So the custom equipment business is going very well. So where does that get us? Well, a recent price of 10 cents with 160 million shares outstanding represents a $16 million market cap and about almost a $17 million enterprise value. You know, that equates to about 6 times pre-pandemic revenue, or 1.1 times LTM revenue, 6 times pre-pandemic EBITDA, and 10 times pre-pandemic earnings. So again, some pretty compelling valuation multiples from our perspective. So to sum up, why invest now? Quite frankly, the business case, as we've mentioned, for energy and carbon emission reduction solutions has never been better. 90% of industrial energy use is thermal energy, and the efficiency of that thermal energy use is only about 50%, so lots of opportunity. TEI continues to be in a perfect position to help our industrial multinational customers achieve their increasingly aggressive carbon emission reduction targets, and we are well on our way to returning to pre-COVID levels of performance. But despite all that, thermal energy's current valuation doesn't reflect our proven growth and profitability, our established multinational customer list, the fact that most of our revenue is repeat orders. It doesn't reflect the significant recent market improvements, dramatically increasing energy prices, increasing costs of carbon, and it doesn't reflect the current record levels of customized equipment orders and revenue or paid turnkey project development for customers. So I hope you agree that Thermal Energy International currently represents a very compelling investment opportunity. Thank you so much for your attention. If you have any other questions, don't hesitate to contact us through our website at www.thermalenergy.com. Thanks so much.